It's Non-Farm Payrolls week, and we will look into how the different potential scenarios may impact the foreign exchange markets. This is the ActivTrades Weekly Outlook, where every Monday we analyze the economic calendar and identify key events, focusing on how they may impact the markets. Stay with us over the next few minutes while I look into how the week is likely to unfold. I will cover a range of topics, including the UK's GDP, Eurozone inflation, and we'll end our weekly analysis by projecting the US non-farm payrolls. On Wednesday, the UK's Office of National Statistics will release GDP figures for the first quarter of the year. This data is seen as a broad measure of the country's economic activity, with the rising trend seen as positive for the pound, while a disappointing reading will have the opposite effect, obviously. Last week, the pound came under pressure following the release of the Bank of England's latest monetary policy statement. The BOE's tone was optimistic, but offered no clues on the timing of future rate hikes, disappointing pound hawks that perhaps expected a more hawkish stance. The very large majority of bank officials voted against a rate hike, with the consensus being that the current rise in inflation is only temporary, and the general takeaway suggesting a lack of urgency to tighten monetary policy. This stance contrasts with what the Fed did, and may ultimately weigh on the pound's performance over the coming weeks. So, a GDP figure, surprising to the upside, may be welcomed by pound bulls, providing some good news. Also on Wednesday, the Eurozone preliminary CPI data for the month of June will be published by the Eurostat. The previous reading showed the core inflation, which excludes more volatile components such as food as energy, of 1%, with the broader reading pointing at a rise of 2%. Over the last few weeks, the euro has been trading within a relatively tight range in relation to the dollar, in the region of $1.20, with the main driver in this correlation being the dollar's behavior, as investors are now specially focused on how the Fed is managing market expectations in relation to the timing of the tapering. Economic recovery in Europe is gathering pace with the stepping up of the vaccination programs and the end of lockdowns. Inflation hasn't so far been anywhere near as much of an issue as on the other side of the Atlantic. However, a higher than expected CPI number could change that and give the euro a boost. And we'll end our weekly outlook by zooming in on Friday's publication of the Non-Farm Payrolls employment data. This report, as we all know, is considered the most important economic indicator for forex traders. This is especially true these days, with the recovery in employment appearing to be lagging behind other aspects of the economic recovery. The Federal Reserve surprised everyone a couple of weeks ago, adopting a more hawkish posture by bringing forward the timing of the tapering by a full year. However, since then, several bank officials spoke in public, and while some, including the chairman Jerome Powell, did their best to water down the shift in policy, others adopted a more bullish stance, even suggesting the possibility of a rate hike next year. So, with the previous two non-farms falling short of the consensus, this one is expected to beat May's 559,000 new jobs. Should employment data disappoint again, those who believe that it is too early to be worrying about inflation will feel vindicated, with the dollar likely to suffer. On the other hand, a high reading could mean more gains for the greenback. This is all for today. We will be back next Monday for another weekly preview. In the meantime, please go to ActivTrades.com for more market analysis. Do subscribe to our channel so we can keep you updated with the latest in the markets, and don't forget to click the like button if you enjoyed the video. Thank you for watching.